Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all, beginning this first day of the week, Monday morning at around about 10 o'clock, markets have adjusted themselves a little bit after a fabulous rally over the last maybe about 10 odd days, and after seeing a new all-time high of 26,200 and so on and so forth on the Sensex. We had given our view last week that possibly we can expect a little bit of consolidation profit booking, but market maintained its momentum, and in fact on the FNO expiry day last week on Thursday as well as on Friday, the markets gave us a very pleasant surprise in terms of attaining all-time highs, lifetime highs rather. Before I go any further, let me give you certain levels on Sensex, Nifty, Bank Nifty, Rupee Dollar as well as crude oil. So as I speak to you, around about 10 a.m. this Monday morning, Sensex is down 660 odd points. 84,910 is the level on Sensex. Nifty is down about 195 points. 25,980 is the level on Nifty Spot. Bank Nifty down 550 points. 53,280 is the level on Bank Nifty or Nifty Bank. Some bit of weakness in the rupee against the dollar, but have seen a consistent stability in rupee over the last again week to 10 days. Currently 83.76 is the level of rupee against a dollar with a weakness of 0.06 paise on NYMEX and Brent. Despite of the volatile situation in the Middle East, crude has managed to stay on the lower level but has pulled back this morning marginally. $72.49 to a barrel is Brent, and $68.43 to a barrel is NYMEX. First, the view on crude oil and rupee dollar. Well, expect range bound movement with a negative bias as far as crude oil prices are concerned, but a lot depends upon the situation in the Middle East and how does it escalate, or whether it diffuses and what kind of dialogue takes place. So that remains to be seen, but primarily driven by news flows in the situation in the Middle East, and of course the stimulus that has been given in China that has possibly spiked up the crude oil prices a little bit marginally, but nothing to worry about. On the rupee dollar equation, expect a pullback towards 83.60, 83.50. Not much of deterioration can be expected on the rupee against the dollar, and of course the news flow from overseas market in terms of US as to what lies ahead in terms of their economic recovery post the pleasantly surprising rate cut by the Fed chief of 0.50% a couple of days ago. Now coming to the market. So friends, I think it was only prudent to expect this kind of pullback in the markets this Monday morning. You can give various terms to the upside that we've seen: sector rotation, overbought, FIs living in the FOMO factor, or maybe some kind of smart buying coming in. But there has to be some kind of sanity that has to return to the market, and hence we are seeing this correction, which is according to us a very, very healthy sign to pull back a little bit. Give opportunities for profit booking for traders, give opportunities for long-term investors who have missed out on the rally to come and participate in the rally and invest in some fundamentally sound sectors and stocks. So this market can be a factor of China stimulus, can be a factor of overbought position from a short to medium term point of view. Mind you friends, when we say correction is expected, is only from a short to medium term point of view. The long term fundamentals are still very, very strong for the markets, and as always we've been advising all of you all to look at opportunities in a falling market to invest from a long term point of view. We'll come to that in the latter part of this interaction. So, and of course this overbought situation, along with that we have a crucial SEBI meet today. By the end of the day, the outcome of this SEBI meet is going to be awaited, and whether there is going to be any changes that the SEBI wants to put in place in terms of curbing the activity in the FNO segment, especially in the puts and calls, the way retail investors have lost money. We have read certain reports last week. The numbers were astonishing in terms of the losses that retail investors, rather retail traders, have occurred on account of unnecessary, unadvisable positions being taken by those retail traders. So I think by the end of the day we'll have clarity. Can expect a follow-up reaction tomorrow morning when we get back to trade, and even for the rest of the week. It is going to be a truncated week. We are going to have an off on 2nd of October, and very soon we will see curtain raiser for the second quarter earnings. So I think all these put together, overbought situation, SEBI meet, China stimulus, and of course a little bit of profit booking. But we don't see large correction coming in. And mind you friends, when you are at close to 86,000 on the Sensex, last week we were close to 26,200 on the Nifty spot. Point wise correction is not necessarily the most logical thing to see. Percentage wise correction is something that you should look at. So if you put the backdrop of the level of Sensex and Nifty and look at the percentage wise correction, it is hardly anything. And range could be 25,800 to 25,900 on the lower side. So nothing really to worry about. It is only a healthy profit booking with some amount of event-based reaction to be seen in the markets on account of SEBI meet, and of course the way China stimulus is going to happen. We've also seen India VIX, friends, this morning because of the correction. India VIX was up almost about 6.5% at 12.75. So we need to see a little bit of cool off also. But before cool off, I think there will be a spike in India VIX as well. And of course the investment theme that we were speaking about. So there are, always, like, we give you investable ideas. We believe that there are 2 or 3 sectors that are a must in terms of investment opportunity. And with that perspective, we believe that banking and finance, keeping in mind the second quarter earnings which will be approaching post 10th of October, we believe banking and finance is something that you should definitely have a look at. 2 investment ideas, frontline names from public sector and private sector banking names. First one is State Bank of India. Mind you friends, PSU stocks have seen some correction. There was some sell side report from some institutions in terms of concerns on the profitability, margins, asset quality, etc. But I think everything is priced in. This correction is a healthy opportunity to invest into State Bank of India from a long-term point of view. And the second one is large cap name, private sector bank, ICICI Bank. We must have discussed these names earlier also, but it is only prudent on our part to revisit these names given the opportunity and the targets getting revised upwards, and of course the prospects of earnings improvement, not only for this financial year but also for the coming financial years. So these are the 2 investment ideas on the fundamental side. These are not BTST, or these are not short to medium term. These are long term. Long term definition is 12 months, 16 months, 18 months plus. Longer the time horizon, better the profits on your investments. So start at current levels on State Bank of India and ICICI Bank, and on dips you can gradually go on increasing your investment into these 2 names from a long-term point of view. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.